Gonna keep some music in the background for all of us. I mean, why not? SOP, Standard Operating System. For those of you that are new, for those of you that have been following me for quite a while, welcome back to another video, another recording. Breach 2, current market price, 1,116 pips, 2.65%. Now you could have multiple losses, as an example. Each loss equivalent to 100 pips, as an example. But if you stay consistent and sharp in the markets, and if you can hold 1,000 pip, yeah, you can pretty much recover your, it could be one loss, it could be two, or it could be three losses. Does that make sense? Pre-session mapping in the morning. I've got a specific recording to upload. With that being said, current sessions delta sits at 8:15. Now, if you're new and you are still figuring out how to mark out delta, the breaches, so on and so forth, hit me up, and what I'll do is I'll take care of you. I'll show you how to mark up the delta, the breaches, the first high, the first low, and whatever. So, but let's just look at the PA on the 4-hourly time frame. On the 4-hourly time frame, the grid over here starts on a Sunday to Sunday, Sunday to Sunday. Okay, which gives us a clear weekly narrative over here. These rectangles, sort of transparent tool, yeah, is highlighting the delta candle. And what I'll do is I've got a split recording, a separate recording, which will cover delta markup. So last week's high, last week's low. The low was printed first up, as you can see over here with the horizontal ray. I've still put it on to the high, okay, which becomes the current week's reference point to run into. Very similar to session to session inverse. Whatever previous session does, the current session needs to do the opposite, as long as the required condition has been met. Okay. Last week's low, last week's high, we can see that the market ran into the 1.27, exhibit A, exhibit B, exhibit C, okay, and then we came off. So Asia set itself up for the Asia and London push today. The market is running into the current week's delta. When it does that, it will also continue to push higher, because if you look at the overall delta sort of stuff, and if you have been following me for quite a while, I know, we all know that once the price, and I've actually built this from scratch, so feel free to look at the ancillary delta footprint and stay on top of the case studies which I post on a daily basis. So I've built all of this from scratch, okay, which allows us to pretty much get closer to the market truth. Now, I wasn't here, I wasn't sat here predicting this move, okay. I was sat over here and I was simply observing. So observation at its finest. I was observing the breach one, the breach two, and then the delta low being probed, stabbed multiple times. Okay, and then the push into previous sessions unresolved inventory. Look over here, Asia. Okay, Asia's first low sits at 1,115, and Asia's first high sits at 1230 and 1245. So we have unresolved inventory. Well, we had, not anymore because this move has cleared it. We had unresolved inventory left behind by Asia. So now, if you look over here, you know, Asia set itself up for London. London prints delta, multiple stabs, push. New York comes in to assist London, push. Okay, very. This is a classic textbook trade. Um, so that's that, my friends. The 1.18 is a very powerful, and the 1.27, it's a very powerful sort of tooling system, which I highly recommend that you incorporate into your trading journey over here, and then allow the results to speak for itself. On the daily time frame over here, same concept, low to the high, track that across the grid, stab 1.18 to 1.27, secondary attempt, push into the 50 level, the market will rebalance itself over here. Okay, so that's that. Now, when it comes down to following the markets on a daily basis, you have to keep up. You don't necessarily have to stay on the charts 24/7. Yeah, but the main timings that I would recommend you to stay. I mean, look, it all depends on Asia, okay, and it all depends on unresolved inventory left behind by, we have multiple sessions over here. Asia left unresolved even here as well. Asia Monday 25th, unresolved inventory left behind by Asia. Again, Asia, London, New York, Asia. So, you know, multiple sessions have left unresolved inventory. Okay, you're not always gonna get the Asia and London inverse. Okay, and this is the reason why I've tailored the entire case study so that we can actually trade the continuations and not just the Asia and London inverse. Because like I said earlier, I've I've restructured this entire thing so it allows us to really read the market truth, and that's all that matters, right? That's all that matters. It's not about predicting, it's not about being right or being wrong. It's about what is the market, doing, okay? What is it doing? And how can we read that off the candlesticks alone and then combine the footprint charts, the sessions playbook, the case studies, and all of that good stuff, even the CME volatility index. We combine all of this together and we get the truth. We get the move, and that's it. That's all that matters. And then we let the market do its thing. We come off the charts. We come back, tomorrow or even 7, 8 p.m. before market closes, or just come back after market closes. So after 11 o'clock, and then we can actually look at all of the windows where the market has decided to, run into. Windows as in unresolved, inventory which has been left behind. Those windows, because we've got multiple windows to run into. Okay, and then we have the 4 hourly window to also run into. Okay, so yeah, these are powerful tooling systems that I am going to continue exposing and bring to the table for all of you. I've kept it and I've kept it to myself for quite a while, but it will be obviously beneficial for yourself as well to really go out there and practice this in real time frame. Now, when I say that the 1.18 and the 1.27 is a reaction level, that doesn't mean that you go and start drawing it on London session and then you get a break above the 1.27 and then you start shorting. You have to merge. You have to merge everything. Okay, you have to merge the. Look at New York here. New York prints the first low, 14, 14, 15. We get that breach 1 and breach 2. Perfect. Breach 1 higher. Line the crosshair up. Line the crosshair up to the breach 1. We get breach 2, 15. Now, breach 2 over here, yeah, was actually broken. Push, push, push. So you don't want to get caught up in trying to, because yeah, we've got Asia and London inverse delta play. We've got New York. Sorry, we've got London and New York inverse. Yeah, but that doesn't mean that um we're gonna see New York run 700 pips to the upside, and then another. It's about it. It becomes almost impossible for the current session to really push higher and push lower and push higher, so in multiple directions continuously to facilitate multiple unresolved inventory. That is for multi-session play. Okay, and if you look at all the previous sessions, the majority of the sessions are one directional committed. Look at London. Yeah, okay, one, two, and then one directional. Look at New York, one directional. Look at Asia, one, two, one directional. Look at New York. Okay, one directional to the upside. London, one directional to the down. If you look at all the sessions, they all are one directional. You know, some days, for example, Monday, start of the week, you may get choppiness, or Wednesday, midweek reversal. Here, midweek reversals, you may get some sort of choppiness, or even Friday. It's all about following the plan, following exactly what I'm teaching over here, and if you follow this properly, if you understand, okay, if you understand inventory, discovery, session transition, okay, acceptance and rejections, how the delta, you know, could be responsive or it may not even be responsive, continuations, failures, auction completion, you know, um, combining the 4 hourly weekly play over here based off unresolved inventory. It's all it's the same terminology. Nothing changes. You know, there's nothing new that changes over here. It's all the same. Okay. And I just need all of you to understand that nothing changes. Same terminologies, you know. Um, and yeah, look, no need to complicate this. We're going based off session to session inverses. Every single session is going to leave some sort of unresolved inventory, which are the breaches. So, what you want to do is you want to go away, yeah, and you want to learn how to read the breaches. In order to read the breaches, all you have to do is you have to wait for the session to open. When a session opens up, you start tracking the breaches, okay? But obviously, you have to wait for the sequence. The sequence starts from the first low, so 1, 2. That's that breach 1 to the downside. That's that breach 2 to the upside. Zoom in. I've mentioned this previously as well. Zoom in. Yeah, first low, flat bodies to the downside. 1, 2. You see, 1400 and 1415. You want to focus on the first low and the timing, okay? And then comes the breach. So the breach could be to the upside or to the downside. We need, obviously, breaches in both directions. Breach 1, 1430. Cool. Breach 2, that completes the downside breaches. Then you move on to looking at whatever the market prints. So in this case, the market is printing breach 1 to the upside, yeah? And we've also got breach 2 over here, 1530. So use the crosshair, get a mouse, zoom in, use the axis, yeah, on the right to flicker through, zoom in, drag the charts across the grid, zoom in, yeah. Look at the first low, session open, 1, 2. Line the crosshair up to the highest, just the candle high, candle low, so that you are fully aware of where the candle is, printed, placed, or situated at on the map. On the map, the candle's over here, the candle's high is here, the candle's low is over here, the candle's open is here, the candle's close is here. Then you got the next candle, so candle 1 and candle 2. Both of these candles, they belong to the first low. Okay, line the crosshair up to the lowest wick. Breach 1 to the downside. Look at the next breach back above. So that's that breach 1 and breach 2. Cool. Downside breach complete. Then you move on to breach 1 higher. Line the crosshair up to the highest wick of that candle. There you go. Breach 2. This candle respected breach 1. This candle broke that breach 1. So breach 2. That's it. Breach 1 and breach 2. Everything else is excess. Does that make sense? All of this from 1545 is excess, okay? And all of the excess is pretty much cleaning up previous sessions unresolved inventory. And obviously, you know, you're gonna learn that when you start to realize that right now we don't have the first high. We have the first low over here. 1, 2, flat bodies to the downside. We don't have first high. Or maybe we do. Let me check. No, we don't. So this is uneven, as you can see. This is uneven, you see? Candle 1 uneven. So that is not your first high. It is not. Okay? It needs to be flat bodies to the upside. Now let's move over here. Let's see if this is the first high. It's not. See, if you zoom in, you can see it's not uneven. Okay? So, as of here, the current session has not printed its first high. Okay? First low, 1400, 1415. When it comes to, because obviously, you know, you might be confused in trying to understand the difference between first low and first high, which is inside of the session, and standard session and standard session high and low. So when a session close, okay, so look at London, yeah? Look at London. London's standard session low is here, the lowest wick. London's standard session high is here, highest wick. Now London's first low and the first high is, you know, it's different, okay? Because the first high is here, flat bodies to the upside, candle 1, candle 2, okay? First low is here, and is here, 915, 930. Does that make sense? So your session standard high and your session standard low will be different from the first high and the first low. Okay, it's easy to draw New York's low, New York's first low, sorry, New York session low, New York session high. It's easy, you know. See, look, session high, session low. Okay, it's easy to draw that. Look, it's easy to draw Asia high and Asia low. That's Asia's high. Oops. So that's Asia's high over here, and then that's Asia's low. But when it comes down to investigating where the first high is, that you have to start by going over to the session open. So session opens at 12 o'clock. Very simple. It's not difficult. 12 o'clock, and then you look at the first low. Oh, this is uneven, so that's not your first low. You track. So you track. You know, you track the candles 1, 2, 3. You track. This is the first high. See, 1, 2, flat bodies to the upside. Perfect. And then the first low is here, 1, 115. Very simple. But once you practice and you get used to this, you will understand how powerful this is, because this is a game changer, my friends, you know. And it took me a long time to crack this, so here, you know, here it is. So look at the first, look at this, look at the first high, 1, 2, 1230, 1245, yeah. Line the crosser up. Look at breach 1 here, 145. See breach 1, yeah. Breach 1 was responsive. So first high, look at first low here, 115, yeah. Line the crosser up. Breach 1, push. You see that? You know, even here today, London's first high, 815, 830. Downside breaches here, 11:45, breach 2, 12 o'clock. Look at breach 2 lower area, 1, 2, 3, 4, 4 stabs. Return to the delta here, lower area, push. Powerful, very powerful. You know, when you combine that with the 1.27, 1.18, look at this. Let me show you something, and then it's gonna blow your mind. Yeah, it's gonna blow your mind because you have to be on point with this. Current. Let me remove this. So current week is here, Sunday 24th of May up until Sunday 31st of May. Current week's first low is here, 1800 and 2200. So that's the first low. Yeah, flat bodies to the downside. Line the crosshair up. Yeah, you line the crosshair up. Breach 1 is over here. This one. 6 o'clock, Wednesday, 27th of May. Okay, line the crosshair up. That's that breach 1. Which candle broke breach 1? This candle. The next candle, 10 a.m. Cool. That's that breach 2, yeah. Now check this out. Get the fib from last week to last week low, last week high. So we know that 6 o'clock candle breach 1, 10 o'clock breach 2. Okay, cool. Look at this. Taps the 1.18, 1.27, closes above. Breach 2 was broken by which candle? This candle, 2 o'clock. This is not an excess candle, okay? It's the candle that broke the 1.27. Cool. And look at that push. 1, 2. The previous H4 candle sits over here, 10 a.m. Okay. Look at breach 2. Look at breach 2's lower wick. 10 a.m. breaks above breach 2, taps current candle, 829 pips. Do you see how powerful this? Because this is raw price action. You know, this is not where I'm telling you that, you know, this is not where I'm I'm not just telling you some random stuff here. I'm showing you powerful tooling systems here, raw price action, raw candlesticks, and then later on I can show you how to merge the footprint charts, and then we can obviously work our way around it. Okay, so this is the beauty of. So yeah, powerful tooling system, powerful. Look at the daily time frame over here. If I just go over here and if I just keep this on the daily time frame, yeah, the daily as well, low, high, fib 1.18, 27 push. So you know, multiple powerful tooling systems. Starting off with understanding a single session's basically what you have to do in a nutshell, yeah, is when you look at any session, you wanna move, you wanna divert your attention to, has it printed first low? Has it printed first high? Are the breaches, being printed? Make a note of that. Then you move over to finding if that session has printed delta. Okay, that's the baseline. Okay, to understand where liquidity is actually, um, you know, you know, located, placed, or is going to drive. So 1.18, 1.27, powerful tooling system. First high, first low, extremely powerful. You've got the 4 hourly 1.18, 1.27, also powerful. Um, we don't, to be honest with you, taking trades off session high and session low, that's all decoy. That's old. We don't condone in that activity anymore. Understanding breaches, very important. Okay. What else? What else? What else? The CVOL. Okay, the volatility index as well, very very important. And what I'm gonna be doing, I'm gonna be combining all of this on a daily basis in real time, showing all of you as we move along, so that you can obviously just pretty much be on the same boots as me. You know, I'm gonna cut the recording 23 minutes in. Thank you for watching. Let's move on, and I aim and I wish you all the best in your journey adventure. I wish to bring clarity onto the table, and I wish to make sure that anything I bring to the table is tier 1. Okay, as you guys know, the 1.18 is powerful, 1.27 is powerful here on the fib, very powerful. The delta trades are also powerful. We are currently sitting at 150 delta trades logged since December 2025, all logged. And if you were to just have a look at all the delta trades, you can see it for yourself. Losses, wins. You can have a look and decide for yourself if what I'm doing over here, yeah, is something real, or or it's something that is a hit and miss. Because this is not a hit and miss. This is the closest you can get to understanding the market truth. yes, look, there are a few losses, very, very, very miniature, but that's from my side as an operator, you know. Just does that make sense? Because I'm merging this with my day-to-day life, which is hectic. I travel a lot, I move around a lot, you know. So I've been merging all of this with my day-to-day life, and the results speak for themselves. Delta trades have been very responsive and explosive. All the Delta trades that, this whole log includes discovery trades. It includes discovery windows. It also includes non-Delta plays and Delta and the official Delta plays. So when you see some of these losses over here, yeah, these are data points that we are using to understand the overall discovery phase that is happening inside of the sessions. These are huge moves. 550. They're very huge. They're large. They're not. They're not baby small. These are like huge 700-800 pip moves. Does that make sense? 890 pips. Moves. So it's really something that should be. Look at this. 180, 800 pips for bands. So it's something that that we should really pay attention towards, as to how I've broken down this entire sort of you know some sessions, to be honest with you, and learn to actually understand that the discovery trades is something to stay with. 500 pips, 400, 400, 141, 400, and the list just goes on and on, 680, 140. This just goes on. Got so many trades here, to be honest with you. Logged 447, minimum 620, minimum 4, in the range between 400 to 600 is the minimum. 500, it's the bare minimum. So yeah, 350, 529, huge moves, huge moves. So yeah, let's jump to present. This was what, 370. Actually held the trade. I held it till 4470, 800. I've added more exposure over here, 4470, and I've just closed another 300. So now we're waiting for price to return to the H4 delta, and then wait for the session first high and then take it from there. So yeah, this is a powerful way to look at the markets, a powerful way to look at any market, not just gold. I'm talking about any market, silver as well. We can look at silver. If you look over here, this is gold. This is gold futures, by the way. GC, gold COMEX, gold futures. We're looking at gold futures to trade gold, because this is decentralized. This is centralized. The order book is over here. Okay, obviously I'll go in more in depth and in detail with all of this stuff here. So yeah, let's move on and stay strong, my friends. Stay strong.